Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007. Look, today we are jumping into a rapid-fire, CNN-style breaking news deep dive into 5 Canadian small-cap updates. We are delivering the hard financial and operational data that you need to fuel your research.
Yeah, exactly. It is all about the actual numbers today, because when the AI software bubble meets the physical world, who actually makes the money?
Right. So let's start on the digital and tech front line with Nextech3D.ai. That's trading as NTAR on the CSE, NEXCF on the OTCQB, and EP2 on the FSE. They just launched their Crafty Labs AI event marketplace, which is, well, it's basically like an interactive app store for live event experiences.
Oh, for sure. And CEO Evan Gappelberg actually talked about this multi-billion-dollar shift toward data-driven events. I mean, they aren't just hosting things, they are using AI to map the floor and see exactly how attendees engage in real time.
Okay, but let's take that AI out of the virtual space and, put it up in the sky. Draganfly, they just dropped some massive Q1 2026 revenue numbers.
Right, they hit $2,312,353. That is a huge 49.4% jump year over year.
Wait, really? Almost 50%.
Yeah, and they are sitting on a cash balance of $147.3 million.
Wow, okay. But with their military contracts and that Paladin AI Swarmaless integration, are we seeing drones shift from just, hardware plays to pure AI software platforms?
Oh, absolutely. SwarmOS lets multiple drones operate as a synchronized hive mind, and moving to software usually means much better margins.
Yeah, but their gross margin was reported at 15%. I mean, that feels a bit thin for a software pivot, right?
Well, yes, on paper,
right.
But if you back out a one-time inventory write-down, it would actually be 19.6%. That write-down is really just a ghost in the accounting,
Right, got it. So building all these drone hive minds takes massive computing power, and cooling those dense AI chips requires raw materials, specifically helium. That brings us to Metals Creek Resources, MEK on the TSX venture, MCREF on the OTC, and M1C1 on the FSE.
Yeah, they just staked the Smoking Gun prospect down in Newfoundland, and they have this wild historical data from hole 7967 that yielded a highly anomalous 8,900 parts per billion of helium.
Hold on, I mean, this is historic data. How confident can you really be as an investor before new drills actually hit the ground?
It is calculated speculation for sure. It's sitting right near a historic high-pressure gas well, so the geological trap is there. Plus, with global AI helium demand just exploding right now, it's a prime setup for aggressive drilling.
Okay, shifting from speculative gases to proven hard assets, Lafleur Minerals,
right.
That is LFLR on the CSE, LFLRF on the OTC, and 3WK0 on the FSE.
Right, they detailed drilling at their Swanson deposit, hitting 2.95 grams per ton of gold over a massive 80 meters.
Over 80 meters, oh wow. And since they own the Beacon Gold Mill and plan to restart it next quarter, I mean, they aren't just exploring anymore, they are pivoting to near-term production.
Exactly. Finding the gold is great, but having the physical infrastructure to actually process it immediately, that is where the real leverage is for investors.
Speaking of physical infrastructure, let's look at securing manufacturing space above ground. Pyrogenesis, PYR on the TSX, PYRGF on the OTCQX, and 8PY1 on the FRA.
Yeah, they just acquired their Turcotte facility in a $3.1 million out-of-court settlement. They paid roughly $76 per square foot in a market where the average is like $250.
Wait, that is like buying $1 for 30 cents?
Pretty much. The strategy here is to do a sale leaseback so they can immediately unlock that capital without ever losing their factory.
Wow, that is brilliant financial judo. So wrapping this deep dive up, what does this all mean for you? Whether you're researching critical helium to cool AI servers or looking at soaring drone revenues, tangible execution is what really separates hype from value.
Right, exactly. And it leaves you with something provocative to chew on. If an advanced tech company's most immediate, brilliant, cash-generating move is flipping industrial real estate, are we valuing these small caps on their disruptive technology or just their gritty physical survival skills?
That's a fascinating point to leave off on. Keep digging into your own research and we will catch you on the next deep dive.